During that period working with different banks, different desks, I sort of built a framework where looking at how macro trends actually affect the prices of like the financial assets you trade. It took a while to build it, but it was pretty robust. It went through like 50 years of data. It sort of explained, you sort of tells you what sort of assets you need to invest in depending on where you are in the economic cycle, right? So that was good. So I had that framework in mind. So then I was deciding how I'm going to do this. And I looked at asset allocators and I realized, some guys want to invest in equities because they want higher long-term returns.
Yeah.
And they don't mind taking a bit of volatility, like what we mentioned just now, or drawdowns. And then you have the fixed income investor who doesn't want any volatility, he wants less drawdowns, but he doesn't mind taking lower returns. And using that macro framework when I was trading, I realized that, we built something that can have the best of both worlds, right? So what we're doing right now is providing investors with bond-like volatility. So, pretty much 5, 6, 7% vol,
Yeah.
minimal drawdowns, but the returns they're equivalent to global equities. So I thought it was a unique strategy that I wanted to build on my own. It's good to start on your own, building a new business. It was exciting. Wife was supportive, and I think it's been growing quite nicely over the last 4 years. And it's been an interesting experience because I didn't expect markets to be the way they are. When I set out,
yeah, I don't think you'd have got into macro if we knew these was going to be how it was going to unfold. But yeah,
because it's been 4 years. It's been what, a bull market, a bear market, a bull market,
yes,
a bear market,
yeah,
and then a bull market.
Correct.
I've never quite seen anything like that, right?
Correct.
So yeah, I think seeing that strategy actually go through these crazy periods with the same amount of low vol and steady returns. I think there's room for a strategy like that. I'm not sure it would sit well within certain bigger outfits, but It's something I want to build as a business.
Sure. And I think actually this is kind of the real test, right? As you can always find a hedge fund manager who he or she has done quite well in one regime, and then the regime shifts and all of a sudden they're from hero to zero, or by then they're 5 billion and they just sit there and collect the management fees, right?
That's right.